We're going to go to third round of questioning and final round of questioning for Mr. Kashkari, and then we'll go to the next panel afterwards. I thank you for your presence here and for your willingness to submit the questions. National City Bank, are you concerned that, you know, when you pick winners and losers, that you're increasing market concentration that may work against the interest of consumers and other industries? Are you concerned about that?
Well, Congressman, we are not actively trying to consolidate the industry.
But do you talk to regulators? Do the regulators say it's okay to concentrate in markets?
The regulators, I think, will say if you have a failing institution that gets taken over by a healthy institution, that community is better off.
Not. Okay. I want to go on to another question. By my calculation, out of the first TARP tranche of $350 billion, 250 has already been spent or pledged, and you have another 40 for further aid to AIG, remaining 60 for new capital purchase plan for non-bank financial institutions. Is it fair to say you've already committed the entirety of the first tranche of $350 billion?
I don't think the last 60, Congressman, has not been committed.
And none of the commitment was for the purchase of mortgage-related asset or conditioned on the recipients of the TARP funds undertaking any mortgage modifications. Is that correct?
Not contractually.
Do you anticipate Congress is going to receive a request in 65 remaining days of this President's administration for Treasury to get access to the second tranche?
The Secretary has not made any determination on when he would make such a request.
You know, one of the things that strikes me in your testimony is your view that private efforts, up to and including the Hope Now streamline modification, are sufficient to stem the foreclosure crisis. You know, it's kind of interesting because we kind of started there. We started with the private sector. We ended up with subprime loans. We started with the private sector, and we ended up with, you know, $684 trillion in derivatives. And we got people losing their homes. And then we came up with the TARP, which is going to interfere in the marketplace, but promising us that it's going to help homeowners. And now we've reversed the course, and we're saying again it's going to be private efforts, loan modification with regulations, kind of like we're back to the future. Now, you're still saying this. Now it's private efforts. Mortgage money is going to go to borrowers. You're going to stabilize mortgage rates, and people are going to be able to protect their homes. But at the Financial Services Committee hearing on Tuesday, it became clear that the efforts by the private sector to remedy the problems, even efforts coordinated by federal agencies, were insufficient. As our hearing witness, Thomas Deutsch, stated 2 days ago at the Financial Services Committee, macroeconomic forces bearing down an already troubled housing market are simply too strong for the private sector loan modification initiatives alone to counteract the nationwide increase in mortgage defaults and foreclosures. It's unquote. Now, Mr. Kashkari, why do you have more confidence in the ability of the servicing industry to avoid a tsunami of foreclosures than these observers and, in fact, than the servicing industry has in itself?
Could you explain to us? Well, Congressman, again, if you look at the data on what's been achieved, you know, increasing modifications from 23,000 a month to 100,000 a month over the course of the past year, over 200,000 Americans are getting a form of loan workout every month. It's not enough, but a lot of progress has been made. I would also very respectfully ask you to consider the incentives of some folks who are making these plans. You know, there are some folks who would like nothing more than the government to provide guarantees for mortgage-backed securities. The investors would love that. The investors around the world would love it if the U.S. government guaranteed all their mortgage-backed securities under the rubric of helping homeowners.
Well, if it gave loan modification and directed lowering principal and interest rates and extending the terms of payments, maybe millions of homeowners would love it. I don't know if you've thought of that, though. Can you point to anything in your Hope Now or any other private initiative that cures the problems of large proportions of negative equity many borrowers face now that the housing bubble is deflating?
Negative equity is a very tough problem, Congressman. The Hope for Homeowners bill that was passed by this Congress and signed by the President is directed specifically at that problem to encourage servicers to take write-downs to get them into mortgages that homeowners can afford with positive equity.
I've been informed by staff there's only been 42 workouts. Just thought I'd talk about a box score here. I've got a minute left. And in that final minute, I just want to apprise the members of the subcommittee about this. I just talked to Mr. Issa about this matter. We have many industries that are being looked at here. I'm concerned that with all this attention to finance capital, which has been unregulated, we're seeing our industrial capital crushed here. And we're seeing our industrial base threatened by credit freezes. In Cleveland, for example, we have a steel mill that's on idle because orders have dropped because it's a credit freeze. And we have a credit freeze going on where consumers can't get auto loans. So you have people getting laid off in the auto industry. America's national security is at risk. So this subcommittee is going to hold a hearing next Thursday on this specific issue. And we're going to ask people, I understand your time availability, but we're going to ask somebody from Treasury to be present to also discuss about what Treasury's plans are, if any, to deal with the fact that we have an industrial base that's in imminent peril. You know, when Mr. Cummings said earlier in questioning, and his comments are well taken, because when we go back home, people are asking, well, what are you doing to keep us in our homes? What are you doing to help protect jobs? We have a whole way of life that's threatened in America. And one thing this subcommittee can do is to require people to come forward and answer questions and try to use that information that we gain to suggest new initiatives. And I want to thank Mr. Issa for his willingness to pursue that. And so next Thursday, we'll give you the exact time, but we are going to have a hearing on that, and because we're concerned about using the assets that the federal government has to protect an entire way of life. I just wanted to make that comment as the chair,